Well, participants, welcome back to the second session. Our topic is stores account. We have Sri R.V. Ramnamurthy, retired Deputy CFO accounts. He will take up the session. Welcome, sir, and it's over to you to come in the session.
I am R.V.R. Murthy, retired Deputy CFO, South Central Railway. I'll be talking to you on stores accounts. I'm sorry, there was some technical issue, internet failure here, and then some other issues. The camera was not working. I'll talk to you for next 1 hour, 1.5 hour, 1 hour 45 minutes on the stores accounts on the railways. Okay. Then to start with stores accounts, Indian Railways is a major transport organization and is a common carrier. It requires to procure or manufacture and stock various items of stores for its regular maintenance and upkeep of its assets and services. Am I audible now?
Yes, sir.
Okay.
Sir.
Okay. Indian Railways, I'll repeat, Indian Railways is a major transport organization and is a common carrier. It requires to procure or manufacture and stock various items of stores for its regular maintenance and upkeep of its assets and services. The stores procured and held in stock are capital intensive and are stocked in various stocking depots located on the railway. As the receipt of material at depots is initially for stocking and for its subsequent issue. Hello, please. Any issues? Connect, go ahead. There's some crosstalk. I'm able to hear some crosstalk. That's why.
Sir, can I unmute all the participants, sir?
HRMS లో చేయలేదు అది నువ్వు చేసింది HRMS లో కాదు.
Sir, please mute your audios. I'm hearing some crosstalk.
Sir, I muted all the participants, sir.
Okay, I'll go ahead.
And the last 15 minutes we can.
It requires. The stores procured or held in stock are capital intensive and are stocked in various stocking depots located on the railway. As the receipt of material at depots is initially for stocking and for its subsequent issue based on demands from various custodians or users, the value of these stores cannot be charged off to the consuming departments immediately on purchase. What I'm saying is here, Indian Railways is a major organized transport carrier and it requires various stores to be procured and stocked with the railways within its depots to issue to the various consumers or as per their demands as and when required. Because the stores procured immediately cannot be charged to the departments concerned because we don't know who will be drawing these stores and in what quantities. We have to hold these stores in a separate suspense set of account pending its final issue to the recipients. As the receipt of material deposit is initially for stocking and for its subsequent issue based on demands, the value of these stores cannot be charged off to the consuming departments immediately on purchase. Hence, suspense accounts have to be maintained for stores held in stock by keeping them in a suspense account. Okay. Am I clear? Suspense accounts are maintained for record of transactions which cannot be booked to final heads of accounts. Transactions in suspense accounts are held temporarily. They are cleared by payment or recovery or adjustment to final heads of account. For stores, suspense accounts are maintained for record of inventory accounts for stores in stock, purchases, sales, stores in transit, stock adjustment account, etc. This is only an introduction. We'll go to the main thing. Accordingly, stores is a major suspense head and the following accounts are maintained for record of various types of stores transactions. We have various suspense accounts, that is stores in stock account, the purchase suspense account, the stock adjustment account, the stores in transit account, the sales suspense account, the miscellaneous advances capital account. All these 6 accounts are capital suspense accounts where the cost of the amounts booked to this, the values booked to these accounts is borne on capital account. And then coming to the miscellaneous deposits account, deposit miscellaneous, maintained for security deposit, but accounting security deposit and earnest money deposits, which is a debt account. And then miscellaneous advances revenue, which is a revenue account for recording miscellaneous transactions. Okay, so we have in the stores is the major suspense head, and under the stores major suspense head, we have the following suspense heads of account under capital suspense, debt, and revenue account. Let us now go ahead with each of the account, how they are operated, what they signify, what balances they will reflect, etc. Stores in stock account, the first account. This suspense account is maintained to record all receipt of stores in depots, whether they are purchased directly from trade, manufactured in railway workshop, inter-railway transfers of stores, inter-depot transfers of stores, and stores returned by the custodians. What I mean is, this stores in stock account is a suspense account where you record on the debit side all the receipt of stores, whether it is purchased directly from the market or manufactured and received back for stocking in the stores depots, or inter-railway transfers on assistance basis from one railway to another railway, or inter-depot transfers on assistance from one depot to another depot within the railway, or even the returned stores, obsolete or scrap material returned by the custodians. All these stores are recorded on the debit side of the stores in stock account. When the stores are received in the depot, the value of the stores is debited to this suspense account by credit to purchase suspense account, value adjustment in the books, right? When the stores are received, the account is debited, okay, and the account is credited by contract credit to the purchase suspense account, or if it is an adjustment transactions, it will be adjusted in the books of accounts. Okay, only those transactions against whom which are purchased from the trade against cash payment will reflect in the purchase suspense account as a contra to the stores in stock account. Okay, the journal entry for this is when the material is purchased and received and accepted, an R note is issued by the depot. This R note forms the basic document for accountal of the material. So when the R note is prepared, the book accounting adjustment takes place. The price ledger section attached to each of the depots which function under the WOs will value the vouchers and account the vouchers in the books of the accounts of the railway. The journal entry for accountal of the receipt when it is purchased from the trade is stores in stock suspense account is debited and the contra credit goes to purchase suspense account. I repeat, when the material is purchased from the trade and this trade supplier supplies the material and it is received in the depot and it is accepted, a receipt note is prepared. This receipt note is accounted valued by the price ledger section of WO's office attached to the depot, and then it is put to account by debiting stores in stock suspense account and by crediting the purchase suspense account. Now you may ask, what is this receipt note? Receipt note is a document which allows the railways to record the purchases made. Okay. This receipt note is prepared in 4 copies. The first copy is one copy is given to the supplier as an acknowledgement for having received the material supplied by him and to seek his payment from the concerned paying authority. One copy is retained by the depot as its office copy. 2 copies are sent to the price ledger section who will value the voucher and retain 1 copy with them and send another copy to the purchase suspense account who will credit the purchase suspense account. Now with the introduction of IMMIS, etc., these are all done in the system. Okay, but this is conventionally, this is as per the codal provision. The R note is prepared in 4 copies. 1 copy is given to the supplier for seeking his payment. 1 copy is retained as office copy of the depot which has received the material. 2 copies are sent to the price ledger section attached to the depot who will value the voucher and put the transaction through accounts. Retain 1 copy and send one copy to the purchase suspense account for posting the credit. Okay, when the stores are issued from stock, the suspense account, I'm sorry, when the inspection is done by an agency other than the railways, the receipt note is prepared in 5 copies and the 5th copy goes to the inspection agency, that is Directorate of Inspections, or the Rights Inspection Agency, or RDSO, whoever it is, who is the authority who has inspected the material. The 5th copy of the R note is sent to him. When the stores are issued from stock, the suspense account is credited. You understood now? Whenever the material is received, in whatever form it is, whether it is received from trade, is manufactured from workshop and received back in the depot, or it is inter-railway transactions, or inter-depot transfer of material, or returned stores, all these are accounted on the debit side of the stores in stock account. Okay. And when the material is issued, the stores in stock account is credited, and the department to whom the material is issued will be debited. That is the final head. The journal entry is departmental final head of account. Whoever is indented the material, whoever has received the material, his account will be debited, and the stores in stock suspense account is credited. This is how the stores in stock account is operated. The debits are for the receipts, the credits are for the issues. Okay. The valuation of receipt of stores is based on their purchase price or at predetermined price depending upon the nature of receipt. See, I have told you what are the sources of receipt of material are debit to the stores in stock account. If the material is directly purchased from trade, the value will be debited, purchase price at the rate at which the purchases are made will be debited to stores in stock account. If it is a workshop manufactured item, the predetermined price, and for returned stores, the book average rate of scrap material, inter-depot transfers, inter-railway transfers based on the book average rates, right? This is how it is done. Next, coming to purchase suspense account. Sorry, the issue of stores, Aditya, the issue of stores is always made at book average rate, that is weighted average rate, or at predetermined rate. This account always shows, see, I have told you the receipt is based on the purchase price or the predetermined rate for workshop manufactured items, or book average rates for returned stores, scrap material, or inter-depot transfers, inter-railway transfers. The issues are basically based on the predetermined rates or at the book average rate, which is a weighted average. Okay, this is how the account will be debited and credited. This account always shows a debit balance indicating that the stores procured are held in stock and are awaiting issue to indentors. That is, you have received the material, you kept in stock with them, you will be issuing as and when there is a demand for these items. That means at any given period of time, you will be having stores in stock to issue the material to the person, to the department or the consignee, whoever wants the material. The account should be checked to see that there are no entries of quantities without values, values without quantities, and minus values or quantity, so of or both. Managerial reports are obtained periodically in respect of overstock and inactive items for review. This aspect, overstocks and inactive, I'll be telling in my class, subsequent class, where I will be talking about the inventory control management, inventory control, ABC analysis, etc. Okay, next. Purchase suspense account. We have seen the stores in stock account, the debit, how it is debited, how it is credited, with what value it is debited, with what value it is credited, how it, what are the sources of receipts of debits, how the material is issued. Okay. This suspense account is credited. The purchase suspense account is credited with the value of receipt of stores and accounted through receipt notes issued by the depots for every purchase made with contra debit to stores in stock account. We have seen in the earlier screen where for accountal of debits, whenever the material is received in stores and stock account through the RO. Through the RO, you debit the stores and stock account and the contra credit goes to purchase suspense account. So I told you earlier that out of the two R notes, the price ledger section received after valuation will send one copy of the valued voucher to the purchase section for posting this credit. That voucher will be used for posting the purchase suspense credit balance. This suspense account is credited with the value of stores and accounted through receipt notes issued by the depot for every purchase made with contra debit to stores in stock account. Right? The journal entry is stores in stock suspense account debtor to purchase suspense account. Okay, this is how these material received is accounted in the purchase suspense account. The account is debited when payment is made by credit to checks and bills. See, we have accounted the material received as credit to purchase suspense account. Then we are saying the account is debited when the payment is made to the party. Right? When the payment is made to the party, the purchase suspense account is debited and the checks and bills suspense account is credited for the cash outgo. One thing I want to tell you here is this purchase suspense account will ensure wrong payments, overpayments, and double payments if there are any claims on the material which have been supplied to the railways. Because any payment which has to be made should be first certified by the purchase section that the material supplied has been the amount claimed, the value of the material claimed has been actually received by the depot, it is accounted by the depot, and it has come to the purchase suspense account. Accordingly, we are certifying that the credit balance in purchase suspense account to the extent of so and so rupees, which authorizes the bill passing officer to make the payment. So this purchase suspense account will act as an intermediary to avoid wrong or double payments. See, once the payment is made, then the purchase suspense account got posted, debit got posted. So there is no credit for further payment to the party. Okay, this acts as a checks and balances suspense. Okay. The stores supplied are inspected and accepted. Once the stores are materially supplied and is supplied to the depot, they are inspected, and on inspection of the material, the stores are taken into account by preparing a receipt note furnishing full details. What does the receipt note? I told you a receipt note is prepared, but what does it contain? It contains full details of the purchase. That is the name of the supplier, the description of the material, the unit of accountant, the rate at which it has been purchased, the due date by which it has to be supplied, what is the value of the RO of the supply, what is the quantity supplied, were there any rejected quantity, or what is the accepted quantity. All these details will be available in the R note. Okay. Full details of the purchase with its cost and quantity received and accepted is also mentioned in the R note. Suppose if there is a short note, what is a receipt note? You have to answer this. You have to write this. It is an R note, is a receipt note, is a document prepared after receipt and acceptance of the material by the depot officer, which is prepared in 4 copies or 5 copies depending upon the agency of inspection. Right? If it is a consignee inspection, 4 copies are prepared. If it is an inspection, third-party inspection, 5 copies are prepared. Like RDSO writes, they are inspecting the material. This contains the full details of the purchase of the material, like the description of the material, the supplier, etc., etc., and the total quantity supplied, by what date he has supplied, has he supplied within the due date, etc. And what is the quantity accepted? Were there any rejected quantity, or the complete quantity has been accepted? Complete details will be there in the R note. This receipt note forms the basic document for accounting of stores purchased. Okay, this receipt note entitles the supplier to claim his payment from the paying authority. Thus, all purchases pass through the purchase suspense account. Right? Am I clear? I have talked about the stores in stock account, where the receipt of transactions is debited and the issue of transactions are credited. In the purchase suspense account, where the on acceptance of the material and the issue of R note, the receipt of R note by the purchase section, the purchase suspense account is credited, and when the payment is made, this purchase suspense account gets debited. Accordingly, the purchase suspense account will get closed. But the purchase suspense account generally shows a debit. Next, we will go to the next slide. Aditya. The purchase suspense account, Aditya, the purchase suspense account should always show a debit balance, a credit balance, indicating that the stores purchased and accounted are awaiting payment. The purchase suspense account generally shows a debit balance. The purchase suspense account generally shows a debit balance indicating that the stores purchased and accounted are awaiting payment. But with the introduction of advance payment of to suppliers, నీకు అందుకనే తలపేసుకోవద్దని చెప్పాను. గట్టిగా 3 సార్లు వచ్చాను. ఈ స్క్రీన్ మీద వస్తుంది ఇది. Okay, generally the purchase suspense account should show a credit balance indicating that stores purchased and accounted are awaiting payment. But with the introduction of advance payments to suppliers, that is 95% advance payment, 97% advance payment, and 98% advance payment, the purchase suspense account is first debited when the advance payment is made and subsequently credited when the material is actually received and supplied by the and accepted by the depot. See, this 95%, 97%, 98% advance payment are as per the purchase order terms, where the supplier, as per his demand, he is entitled for payment. This 95% or 97% or 98% advance payments are made against a proof of dispatch that the material has not, either the material would have received the depot or material would not have received the depot, but based on the proof that the material has been dispatched, the party is entitled to get 95% out of his 100% value as advance payment. How this happens? When the material is supplied by rail, the supplier will submit the stores to the to the railways, and the railway will issue an RR. When the RR is a clear RR saying that so and so quantity of material has been handed over for transport to such and such place, based on the strength of that R note, which is called a clear RR, the advance payment can be accepted. When the material is dispatched by road, the party is entitled to either ship it by rail or road. When it is shipped by rail, he has to submit a clear RR. If it is an unclear RR, it doesn't mention the quantity, then he is not entitled for any payment unless there is an indemnity bond. Okay, but when the material is supplied with by road, based on the strength of the R note, no payment can be made, because the fundamental difference here is railways are common carriers, whereas roadways are not common carriers. Right? When the material is supplied by road, only on physical receipt of material in the depot, I repeat, when the material is supplied by road, only on actual physical receipt of material in the depot, the depot officer will endorse on the delivery challan of the supplier that such and such quantity of the material has been received by lorry number so and so, on date so and so, subject to inspection and acceptance. He gives a qualifying remark like this. Based on the strength that the material has been physically received by him, the advance payment can be accepted. Just by producing an like RR, lorry receipt, he cannot get any payment. It has to be endorsed, and the material would have been physically unloaded in the depot, and the material pending its acceptance and accountal, the advance payment can be made. Right? The purchase and suspense account in such instances where advance payment is made is first debited. In the earlier case, I said first the credit comes to the books of accounts. That is, first the R note credit will come, then the payment will take place. So against that credit, debit transaction will take place. But in the case of advance payments, okay, where the firms are entitled for advance payment, first the purchase suspense account is debited by credit to purchase checks and bills when the payment is made. And when the suspense account is subsequently credited with the supplied material is accepted and receipt note is issued. Then in this case, the earlier transaction of stores in stock account to purchase suspense account will be operated. Am I clear? In the first instance, first you get the credit, then the debit for payment. In this case, where the advance payments influence the purchase suspense account, first the purchase suspense account will get debited, then the material will come. Okay. Please understand, with the influence, generally the purchase suspense account should show a credit balance. But the impact of these advance payments will render the purchase suspense account showing a debit balance. This is what is the reality today. Okay. One thing you have to note here is, in addition to the advance payment against a proof of dispatch, that is by lorry or by road or rail, there are certain payments, that is 100% payment against the pro forma invoice, which are not debited to purchase suspense account. What are 100% advance payments against pro forma invoice? That is, the purchase order contains a condition that the firm is entitled for 100% pro forma invoice payment, right? In which case, the firm, after the material is ready, he will issue a pro forma invoice. Instead of a normal invoice, he will issue a pro forma invoice and send it to the depot officer. The depot officer, based on the strength of the pro forma invoice and the eligibility as per the PO, he will prepare a pay order and ask the accounts officer to pass the pay order in favor of the party who is entitled for this pro forma invoice payment. So a check will be made out separately, and this check will be handed out to the depot representative, who will collect from the railways, and he will go to collect the check and go to the premises of the firm along with an authorization letter to collect the material. That is, he will issue the check and collect the material. This is like cash and carry. Okay, in which case, these are type of advance payments are not debited to purchase suspense account. I will tell you where it is credited. It is debited to miscellaneous advances revenue. When I am talking about that account subsequently, I will tell you. Right? Aditya, stop అయిపోయింది. అమ్మా ఏంట్రా వాడు ఎలా ఏడిపిస్తుంది ఇది, ఇట్లా ఏడిపిస్తుందిరా ఇది, ఎందుకు ఇట్లా ఏడిపిస్తుంది వాడ? After purchase suspense account, I'm sorry, there is a lot of problem here with the system or the internet. The next account is the stock adjustment account. This suspense account is maintained to record and bring to account various differences on account of stores transactions. Stock adjustment account is an adjustment account. All the differences on account of various stores transactions that have taken place during the day to day, they will be maintained or recorded under stock adjustment account. This account is having three parts, that is part 1, part 2 and part 3. The stock adjustment account is divided into three parts, part 1, part 2 and part 3. What are these three parts? Part 1 of stock adjustment account records differences, value differences on account of differences in quantities. When there is a difference on account of quantity, when this will arise, see, as per the books, there are 100 numbers of a particular item. When you actually do a physical stock verification, either they are less or more. So these differences, when you actually take the inventory, physical count, they are called differences in quantities. Okay, these differences may arise on account of a physical stock verification by the account staff or by the departmental officers also. All such differences in values on account of differences in stock are accounted under part A, part 1 of the stock adjustment account. Okay, on account of differences in quantities. Part 2 of the stock adjustment account records value differences on account of differences in values between book rate and sale rate, decategorization and recategorization of stores, rounding off, etc. Part 2 of the part 1, I have told you, they record differences in quantities. Part 2, differences in values, that is value differences on account of differences in values. There is a book rate, there is a particular item of stores of scrap which is held in stock with us for 100 rupees. When we sold it, it has realized 110 rupees or it has realized only 95 rupees. This 5 rupees loss or 10 rupees gain will be recorded in the part 2 of the stock adjustment account as differences in values. These may be due to difference between the book rate and sale rate, decategorization and recategorization of stores, rounding off, etc. What is this decategorization? Recategorization, I will tell you in my subsequent class when I am talking about the surplus stores. Okay, when the material, I'll just make a passing remark here, when the material held in stores are not required by the railway and they are declared as surplus, the value of the stores will be accounted at 10% in the books against its 100% original value. This 90% will go to the stock adjustment account as differences in value due to decategorization. Right? What is recategorization? If this 10 rupees value of surplus stores, if it is reissued tomorrow based on a demand subsequently, they will have to be issued at 100 rupees value, not at 10 rupees value. And this 90% will go as credit to stock adjustment account part 2. That is difference due to recategorization of stores, and rounding off, etc. will go to part 2 of the stock adjustment account. The part 3 of the stock adjustment account records value differences on account of miscellaneous differences like differences due to loss, theft, obsolescence, etc. See, when you are having stores in stock in the depots, there can be a loss of stores, theft, there can be a situation of the theft taking place, or the material have become obsolete to the requirement, because day to day there will be standardization and there will be R&D of the various activities or repair or manufacturing activities, and the new design or new products are introduced against the old products. So the old products have become obsolete to the requirements of the railway. So such loss of such value of stores is again recorded under part 3 of the stock adjustment account. Like evaporation, if there are any items where oxidation takes place, like your HSD oil or even the motor spirit, all the losses on account of evaporation or losses on account of multiple issues, etc., are all accounted under part 3. In addition to the fire accident, if there is any accident taken place in the depot and some stores have value has been lost, those values are also accounted under the differences will also, losses will be accounted under part 3 of the stock adjustment account, etc. So the stock adjustment account is divided into 3 parts: part A, part 2, part 1, part 2, part 3. Part 1 records differences due to physical quantities. Part 2, differences in values, differences of miscellaneous nature, etc. So the fundamental principle here is the stock adjustment account may either get a debit or a credit, depending upon the nature of the transaction. I told you, if the physical stock is, actual stock is more than the book stock, then there is a gain for the railway. It is credited to stock adjustment account. If the physical stock is lower than the book balance, then there is a loss to the railway. It is debited to stock adjustment account. Similarly, when the material is sold, the book rate is 100 rupees. You have realized on sale 110 rupees. The 10 rupees is a gain, which will go as credit to stock adjustment account. With the book rate of 100, if the sale rate is 90, that loss of 10 rupees is debited to stock adjustment account. Did you understand this? What I'm trying to tell you is, there is no authentic principle that this stock adjustment account should only be debited or only be credited. It is not like that. The stock adjustment account can get debit transactions as well as credit transactions. If they are losses, if the transactions are loss to the railway, they are debited to stock adjustment account. If they are gains to the railway, they are credited to stock adjustment account. Okay. It depends upon the type of transaction and the nature of the transaction. Okay, thus the stock adjustment account can show either a debit balance or a credit balance depending upon the type of transactions that are booked to the account. The stock adjustment account is cleared periodically, that is once in 6 months, and sometimes once in 3 months also. Some codal provisions say 3 months. Some instructions are there which say that this stock adjustment account should be cleared as frequently as possible, within 3 months also, by debiting or crediting various departments based on their pro rata drawal of stores from the depot. This is important. How you clear the stock adjustment account? Already this is kachra you have collected in one account under various parts A, B, 1, 2, 3 of the stock adjustment account. Think like this: the stock adjustment is a kachra. It's a dustbin. Now, how to empty the dustbin? Now there are all credit transaction anybody will be willing to take. If there are debit transactions, nobody will be willing to take voluntarily. So what happens is, how you have to clear the debit balances under stock adjustment account? By debiting to various departments. How you will depart? If there are 100 rupees, there are 10 departments. Will you equally distribute 100 rupees among 10 departments at 10 rupees each? They may accept or may not accept. So the logical reasoning, the logic for distribution or emptying your dustbin is that, see, all the departments will be drawing stores from the stores depots. Every department, your accounts department, your civil engineering, your mechanical engineering, S&T, electrical, medical, personnel, everybody would have drawn material from the stores depots. During a year, what are the percentages of material? Total, how much has been drawn? Each department, how much has drawn? They will take out a percentage. Out of, if 100 items have been issued, accounts has taken 100 crores material has been issued. Accounts has taken 8 crores material. Civil engineering has taken 30 crores material. Mechanical has taken 10 crores. Depending upon the percentage of draw, that is accounts 8%, civil engineering 30%, mechanical engineer 20%. Like that, they will work out the percentage based on their proportionate withdrawals from the depot, stores from the depot. And based on those percentages, the stock adjustment account is cleared by debit to the final heads of the department's accounts. Did you understand this logic? How the dustbin is emptied? First, all this kachra is collected. Credits, anybody will be willing to take the credits, but the debits, nobody will be voluntarily willing to take. So there should be a logic to distribute the debits under stock adjustment account by transferring the amounts to the department heads based on the pro rata drawal of stores from the depots. Right? stores in transit account. This account represents stores in transit account. This is also called as a SINT account, right? This account represents the balances of the receiving depot. In the case of inter-depot transfer of stores, when the material is issued by the issuing depot, the same is immediately accounted in the books of the issuing depot by credit to stores in stock account as inter-depot issue, right? Did you understand this? I'll tell you clearly what it is there are two depots within the same railway, X depot and Y depot. Say for example, X depot in one place, Y depot in one place. Y depot is in need of some stores which are not available with them, and they wanted this material to be given to them by X depot who have sufficient stock to spare to Y depot. So in this case, what happens is Y depot places a requisition on X depot to spare such and such material to them. Okay, so when the material is spared by X depot to Y depot, so X depot issues the material. When the material is issued, the stores in stock account of the X depot is credited as issue, inter-depot transfer issue. Did you get my point? Inter-depot transfer issue. Okay, and the stores in stock account is credited and their quantity balance will come down. And the material has been moved or taken by Y depot representative, and it has to get accounted in the Y depot, and it will get accounted in the Y depot only when the material is actually received by Y depot. So generally what happens is the issuing depot will charge off or credit the stores in stock account for having issued the material as inter-depot issue. When the material is received by the receiving depot, they will account it as a receipt or debit in stores in stock account as inter-depot transfer, inter-depot receipt. Right? This is how the debit and credit between the depots in inter-depot transaction takes place. But there can be a situation where the material is issued by the issuing depot, that here in this case it is X depot. They have accounted the material in their books of accounts, okay, by credit having issued the material to a Y depot, but that X depot which has to receive the material, a Y depot which has to receive the material, has not received the material when actually the books have to be closed. Suppose the material has been issued by X depot yesterday, and yesterday you have closed the books of accounts. So there is no opportunity for Y depot to record these transactions in the books of Y. The fundamental principle of accounting or double entry principle of accounting is every debit should have a corresponding credit, or every credit should have a corresponding debit, vice versa. In this case, what happens? X depot has credited its stores in stock account. Y depot could not account the material because the material has not been received when the books of accounts have actually been closed. So this transaction cannot get unaccounted, cannot go unaccounted. So this material cannot be forced on X depot to take as debit because the material has not been received. Because the accounts have been closed, they cannot take the debit. So what is the outcome? What is the way out? You have to maintain another suspense account called stores in transit account, where such transactions where the inter-depot transfers have taken place and the receiving depot could not account the material before on or before the closure of the books of accounts will be debited to stores in transit account. Am I clear? When the material is issued by the issuing depot, it is credited. The receiving depot could not debit the amount because they have either not received the material, or when the material has been received, the books of accounts got closed. So the double entry effect of the transaction will be made to a suspense account temporarily operated, which is called a stores in transit account by debit. So for the The credit in the stores in stock account of the issuing depot, you have a contra debit in the stores in transit account of the receiving depot. Right now, this stores in transit account will be subsequently cleared in the subsequent month or in the subsequent financial year's books of accounts on receipt and acceptance of the material by the depot and its account in stores in transit. In which case, the stores in transit account will get cleared. Let us see the transactions, how it will take place when the material is issued but not received. Stores in transit account will be debited, and the issuing account depots stores in stock account will be credited. Stores in stock account will be debited. Stores in transit account will be debited. Stores in stock of the issuing depot will be credited. When the material is subsequently received in the receiving depot and accounted, the transaction is stores in stock account of the receiving depot debit by credit to stores in stock account, stores in transit account. That is, the stores in stock account which got the debit will be getting a credit, and the stores in transit account will get closed. But in some cases, it happens that the material is not received by the receiving depot as on the date of closing of the books of accounts. In such cases, a suspense account, namely SINT account, is operated by debiting the account pending actual accountal as debit by the receiving depot, subsequently by credit to the SINT account. Originally, in the first transaction is stores in transit account at R2, stores in stock account of the issuing depot. The second transaction is stores in stock account of the receiving depot by credit to stores in transit account. This is how the stores in transit account gets closed. Stores in transit account will always show a debit balance. It cannot show any other balance. It can show only a debit balance. Now let us go to the, what is this account? Sales account. Sales suspense account. This suspense account is maintained. This suspense account is maintained to bring to account all sales transactions either on account of the sales suspense account is another capital suspense head of account, where it is maintained to bring to account all sale transactions which are on account of auction sale of material, direct sale of material, sale of material to railway employees. See, let us go by the first one, auction sale. When the auction sale is, when in nowadays we are having the reverse auction, where the in the e-auction, the bidders give the, we offer the material, they give the rate. But in the earlier auction, we used to have a confidential reserve price, and the material is put to auction. The bidders used to bid and give the rate. In the e-auction, we don't reveal the reserve price. Okay, we will offer the material, and the material is bidded by the intending buyers. When the material on receipt of the reserve price and after this bid is complete for that particular item, the item will be sold or not sold. This is auction sale. All the material is put to auction. All the material, when it is sold, the value realized on sale of this material. First, initially on sale of material, the party will give you earnest money deposit. After, immediately on fall of hammer. Subsequently, he will get some time for payment of the balance sale value. Okay. After completion of the auction, he will get 10 days, 20 days, depending upon the value of the transaction. He will get free time for payment of the item, a free time for payment of the value of the balance value of the lot, which has been purchased by him. So when the auction sale takes place, you will get monies in the form of earnest money deposit or balance sale value from these successful buyers. When the material is received by the railway, the sales suspense account is credited. I will tell you the transactions. In addition to auction sale, where we offer the material for sale, we have direct sale of materials. So this direct sale is different from auction sale, where some suppliers, some buyers want to buy the railway material directly from the railways. They don't want to, they will not participate in auction. They will directly make a request to the railway to supply such and such material to them. Generally, this will be in the case of sidings, then the power corporations for erecting power poles, sidings for their track fittings and track material, etc. In this case, what happens is they directly write a letter or make a representation or make a request with the railways to supply the spare the materials for their legitimate use. In which case, what happens? In the case of auction, you get the bid, and then when based on the bid, whether the reserve price are received or not, you sell the material. In the direct sale, what is the medium? How you will know, determine the value of the item that is sold? What happens is, in the direct sale, we take 65% of the value of the first hand material. If you buy the material new, what will be the cost of the new material? If it is 100 rupees, we will charge them 65 rupees as a cost of the material under direct sale. Over and above the cost of the material, we will have departmental and general charges also levied to conclude the sale with the purchaser. In the case of auction sale, you get the bid and the highest bidder becomes the buyer. In the case of direct sale, we have a procedure how to determine the value of the stores to be sold on direct sale. That is 65% of the class 1 material. Added to that, the incidental charges like general and incidental charges and departmental charges, now even the GST. Okay. This sum total of all this will form the value of the material for direct sale. Okay, sale of material to employees. Another way how the material can be disposed of is some of the materials can be sold to railway employees. Please, I repeat, some of the materials can be sold to railway employees for their legitimate use only. Suppose you want to buy a loco, you cannot buy. You want to buy a coach, you cannot buy. Only items which are required for the legitimate use of the employees can only be sold on sale to railway employees, like your empty barrels for stocking water, or your some steel scrap like pipes or angles for erecting sheds, etc., or anything which is for the legitimate use of the employees only. In which case, you have to make an application to the depot officer who is holding such stores. Based on the availability, he will ask you to remit the money, and after remitting the money, you will be supplied with the material. And who will fix the rate? The stores finance section will, the stores department annually proposes sale price of the material to be sold to the employees. Annually, the stores department proposes rates, and it is vetted by the stores finance section of the railway, which after vetting will form the sale price for the items to be sold to the railway employees. So in all the three cases, when the material is sold, first the material value is received by the railway. When the material value is received, the journal entry is the suspense account is credited with the value received on sale of stores, including EMD and balance sale value. In the case, the journal entry is when you receive cash, remittance into bank suspense account to sales suspense account. That is, the sales suspense account is credited and cash account is, that is, cash account is debited, sales suspense account is debited. For all cases of sales transaction, first the primary entry to sales account is the credit entry. The first entry is the credit entry, not the debit entry, right? And the account is debited with the value of the material delivered to the buyers. Now, after receipt of the material, after payment, after receipt of the monies, the buyers want to take the material, delivery of the material. When the material is delivered to them, the suspense account, sales suspense account is debited, and the stores in stock account suspense account is credited. Now you may ask where from the sales in the sales transaction stores in suspense account has come. You recall your stores in stock suspense account where I mentioned even returned stores returned by the custodians, that is scrap material, is also one of the source of receipt of material and a debit to stores in stock account. Now when the same scrap material is delivered, stores in stock account is credited and sales suspense account is debited. Logic. Truly speaking, sales suspense account first it is credited with the value of monies received, and then after delivery of the material, the sales suspense account is debited. This is how the sales suspense account debit and credit is operated, and the sales suspense account will always reflect, show, reveal only the credit balances. The sales suspense account always shows a credit balance representing that sold material is not yet delivered. That is, you have sold the material, you have received the money, but the delivery of the material has not taken place. Okay. The second situation is sold material has been delivered. That is, you have sold the material, you have received the monies credited to sales suspense account, material got delivered also, but the accounting adjustment in sales suspense account has not taken place. The third situation is these short deliveries of stores than the advertised quantities. That is another reason why there is a credit balance in sales suspense account is whenever you are selling the material, the quantities are approximate quantities. When you are selling the material on auction, we always call them as approximate quantities. The actual quantities will be known only after delivery of the material. Okay. If there is any difference between there can be a difference between between the advertised quantity and which is the approximate quantity and the actual quantity delivered. If there is, you have advertised a quantity of 100 metric tons, actually at the time of delivery it will happen to be only 80 metric tons. There is a shortage of 20 metric tons. So this 20 metric tons cannot be made good by giving some other material to him. It is not authorized. It is a malpractice. It is fraud on the railway. So you cannot give back the balance 20% quantity, but you have to give him refund for that balance 20% quantity. So whenever there is a short delivery, till such time the refund takes place, the sales suspense account for having received the money in full will show a credit balance. Okay, the sales suspense account is first credited with the value of monies received and material is delivered to the party. At any given period of time, the sales suspense account shows a credit balance only, representing material received, value for sold material received, material not yet delivered, value for sold material received, material also delivered, but the adjustment account has not taken place. Material value received, but there is a short delivery, and to the extent of short delivery, the refund has to be processed by payment to the party. So under all these circumstances, this will show a credit balance only. Okay. Next, going to the miscellaneous advances capital suspense account. This is another capital suspense account. Miscellaneous advances capital, which is also called as a MESI, is operated to bring to account transactions pending adjustment to final head of account. This suspense account is maintained to record all advances made to outsiders on account of fabrication contracts for supply of stores for stocking in the depot. This suspense account is maintained to record all advances made to outsiders on account of fabrication contracts for supply of stores or even advances of cash for stocking the material in the depot. See, what happens is generally the receipt of stores in the depots, I told you there are various sources. One is outright purchase from trade, and then manufactured in the items manufactured in the workshop. How stores are manufactured in the workshop? You buy the raw material from trade, issue the raw material to the workshop, they manufacture the finished product and give it back to the stores, and then you stock them and by recording as debit to stores in stock account. Where the material has to be manufactured not in workshop but has to be manufactured by an outside party other than the railways, you have to either give him a cash advance or a material in lieu of cash for manufacturing the finished product, who will after manufacture will return the finished product to the railways as a receipt from trade. Okay, whenever cash advances are made to the firm, the account is debited with the value of advance paid. Right? Whenever the cash advances are made to the parties, okay, the MAC account is first debited. That is miscellaneous advances account, capital account, miscellaneous advances, capital suspense account are to checks and bills, because cash is going out, checks and bills suspense account is credited, and the miscellaneous advance account is debited whenever cash payment is made. Whenever stores are issued for fabrication to the firm, the account is debited with the value of such stores. So that is the journal entry in this case is miscellaneous advances capital suspense account is debited by credit to stores in stock suspense account. By credit to stores in stock suspense account. That is, in the suspense account is operated both for cash advances or material advances. In both the ways, in both the aspects, the MAC accounts will get debited with the value of the money as it paid as advance or with the value of the stores issued to the contractor as for fabrication purpose. Okay. In both the case, the MAC account is credited. Only thing is, if it is cash, the checks and bills suspense account will be credited when it is cash payment. Stores in stock account is credited when it is stores are supplied. Okay. Generally, in the fabrication contract, there will be an agreement between the railway and the party that railways will supply such and such quantity of so and so material. He will finish and give the material to us, for which he will be paid some fabrication charges. For converting the raw material into a finished product, the supplier will get a remuneration in the form of fabrication charge. That's why these are called fabrication contracts. Okay, like when for every item manufactured, he will get some remuneration in the form of charges to be paid to the contractor, fabrication contract. On receipt of material, once you have issued the material to the party, and now you have to receive the finished product from the party. On receipt of material, the account is credited by contra debit to stores in stock account, which includes cost of material supplied plus fabrication charges payable to the contract agency. That is what I'm saying. When you have issued only the cost of material as per your book rate. Say this is 100 rupees. You have issued him material worth rupees 100. When he has actually supplied the material to you, he has given the material which includes the cost of the material, that is 100 rupees, plus his fabrication charges of rupees 30. So the finished product is costing railways 130 rupees. Now the receipt of material should be taken into account at 130 rupees and stores in stock account should be debited with 130 rupees and miscellaneous advances capital account should be credited with 130 rupees. Now what happens? Initially, the miscellaneous advances capital account got a debit for 100 when the material is issued. When the material is actually returned after fabrication and accountal, the value of the material has become 130 and the MAC account has been credited with 130. In this case, what happens? Against this particular transaction, there will be a credit balance in the miscellaneous suspense head of account to the extent of 30 rupees towards fabrication charges. This fabrication charges or the credit under the miscellaneous suspense head of account will be cleared when you actually make the payment based on the bill preferred by the party. Let us go to the next screen, which is there. In the above scenario, the MAC account is credited it leaves a credit amount. This credit amount represents fabrication charges payable as per agreement to the contractor. When the fabrication charges are claimed and paid, the MSE account gets debited. Now I told you, logically speaking, 100 rupees material you have given to him, your MSE account is debited rupees. When you have the finished product through and it is accounted by the depot and accounted in stores in stock account as debit, it is 130 rupees. Same 130 rupees should come to MSE account. So MSE account is get credited with 130 rupees. Now there is a difference of 30 rupees between the debit and credit, which represents fabrication charges payable to the contractor, and on claim and payment of the fabrication charges, this MSE account will be debited with 30 rupees. So finally, MSE account will get 130 rupees debit, 130 rupees credit, and the suspense account gets closed. Okay, the journal entry is miscellaneous advances capital account debtor to checks and bills account for fabrication charges paid to the party. This MSE account should generally show a debit balance. Now you have seen this MSE account is a check register. It is an account maintained, it's a watch account to monitor the receipt of material or recovery of cash advances made to the parties. So MSE account will always show a debit balance representing advances paid in the form of stores values, stores or cash to the party, and they are to be recovered or supplied in the form of material in the for finished products in case of a fabrication contract. Next. What is this? Deposit miscellaneous account. It is a suspense head of account under major head 8445. It records all credit transactions like miscellaneous deposits made with the railways, like security deposit, earnest money deposit against stores contracts. It is a suspense head of account under the major head. It records all credit transactions like miscellaneous deposits are made with the railways on account of stores contracts, that is earnest money deposits or security deposits with the railway. So the miscellaneous deposit account is first credited with the monies received because they are deposited with the railway. These are debts of the railway which have to be relinquished later on, based after the conclusion of the contract, or in the case of EMD, unsuccessful contracts after the conclusion of the contract, after finalization of the contract. Okay, so all the monies paid by the contractors against various stores contracts in the form of security deposit or earnest money deposit, they are accounted in deposit miscellaneous suspense account, separately maintained for security deposit and earnest money deposit. Okay, they are first credited. The journal entry is remittance into bank account debtor to miscellaneous deposit miscellaneous suspense account. First you receive the money, then you credit to the miscellaneous deposit suspense account as credit. When the deposit amount is returned to the contractor, the deposit miscellaneous suspense account is debited. When the deposit amount is returned to the contractor, the deposit miscellaneous suspense account is debited. That is, you have a credit for received a security deposit or EMD deposit. In the case of EMD of unsuccessful bidders, after finalization of the tender, they will be returned. In the case of a successful contractor, the earnest money deposit will be partly converted towards SD and it will be retained with the railway. And security deposit will also be paid by the party and it is collected and retained with the railway till successful completion of the contract. On successful completion of the contract, the security deposit has to return to the party. Or in the case of unsuccessful bidders, after finalization of the tenders, the earnest money deposit has to be returned. So when the monies are returned to the party, these monies are collected earlier from them and now you are returning to them. These monies were collected as a guarantee, and now after completion of the contract, after confirming that the work has been done satisfactorily, After confirming that there are no dues against this contract recoverable from the contractor, the monies are refunded to the party. When the monies are refunded, deposit miscellaneous suspense account is debited and checks and bills account is credited. Right? In this deposit miscellaneous account, first you get the credit transaction for having collected the money towards SD and EMD paid by the contractors, and then later on refund it to the parties, either to the unsuccessful bidders or the contractors, or to the successful contractor after successful completion of this contract. So when the monies are collected, the deposit miscellaneous account is credited. When the monies are refunded, they are debited to the miscellaneous suspense account. In all the cases, the miscellaneous suspense account should deposit suspense account should show a credit balance only. It can only show a credit balance only. It can never show a debit balance. Further, the debit balances under this account should be examined to see that there are no. The balances under this account should be examined to see that there are no debit items. There cannot be a debit item in isolation in the deposit miscellaneous suspense account, because the incidence of transaction is first the credit, then the debit. Against this credit, the debit. Against the money is collected, now you are refunding the same money. So there cannot be a situation of payment without receipt. So direct debit should never be booked to this head of account. Account should be debited against a corresponding credit already existing in the account. Why I am repeating this? There should be a prior credit for making a refund, because in one of the frauds that has taken place on the railways, there were numerous amounts that have been directly debited to the deposit suspense account. Without confirming the credit, the debits have been willfully been booked to the deposit suspense account, which led to a huge fraud on one of the railways. Okay, that's why I'm repeating that credit, unless there is a credit in deposit suspense account, you cannot pass a debit. If for any reason the credit got wrongly accounted elsewhere, you call for the credit, ensure the credit is accounted in the suspense account, then only after confirming and freezing the credit, you make the debit or refund debit transaction. Never, never, ever book a debit transaction first into the miscellaneous deposit suspense account. Am I clear? Then miscellaneous advances revenue account. This suspense account is, this is another, the earlier deposit suspense account is a debt account, which is debts of the railway, dues of the railway to be refunded to the party. That's why the amounts are reflected under debt head report of the railways. Now miscellaneous advances revenue, this is a revenue account maintained under demand number 12. Okay, this suspense account is maintained to record all charges where the allocation is not known. Allocation is not known. Advances recoverable in cash or through adjustment. 100% advance payment against a pro forma invoice made for stores to be supplied. See, recall my earlier in the earlier I have told you that while booking the advance payment to purchase suspense account, 100% advance payments against pro forma invoice are not booked there. Now the 100% advance payment are to be booked against pro forma invoice are to be accounted under MA. In the purchase suspense, when you have made the advance payment, the material is physically either handed over to the railway, either to the railway authority, either when it is transported by rail, or to the depot officer when the material is transported by road. Physically, the material has been moved or in the custody of the railways. But in the case of 100% pro forma invoice payment, neither the material, there is no material either in the pipeline. The material is with the firm. He wanted you to make a first payment and then take the material. This is something like cash and carry. Because we cannot adjust such a transaction to purchase suspense account, we temporarily account this under miscellaneous advances revenue account and debit the miscellaneous advances revenue account when the pro forma invoice payment is made to the party. And after receipt of the material by the depot from the firm, and after acceptance and after issue of the receipt note, such 100% advance payment pro forma invoices are clearly endorsed as not for payment, because payment has already taken place here. 100% payment has taken place here. So the R notes by the depot officer will be endorsed as not for payment. 100% PI payment, 100% pro forma invoice payment case, not payment now. So such R notes are not sent to the purchase section, but sent to the section where the miscellaneous advances revenue account is maintained. These receipt notes, when they are received by the section which is maintained the revenue account, which journalize the transaction by credit to purchase suspense account and by credit to MAR and debit to purchase suspense account. This on receipt of MAR, on receipt of the receipt notes, the MAR account is credited and purchase suspense account is debited. Right? So in this case, the pro forma again of pro forma invoice, the R note should clearly contain that they are not for payment. Okay. Amounts recoverable towards risk and cost tenders in stores. I am finishing it in 2 minutes, Nagesharao. Amounts recoverable towards risk and cost tenders in stores. When there is a risk purchase, say somebody, you have placed an order, and the party has defaulted in supply of the material, you have called a same tender again, which is called a risk and cost tender. If you contract a higher price than the earlier price, the difference in cost between the cancelled PO or the defaulted PO and the current contracted price is called the risk and cost, and which will be recovered, debited to MAR and recovered from the party.
Can I seek a query, sir, from the participant?
Yes, sir, 1 second, I'm just finishing it in 1 minute. In all the above instances, the MAR suspense account is debited, whether it is where allocation is not.
Any queries, please raise the hand.
When recoveries are made, this account is credited, not booking the amount. Not booking the amounts to MAR would render recoveries going unnoticed and the occurrence of
Am I audible?
this account serves as a watch register for recovery of amount due to railway, receipt of
Please
material
unmute, sir.
advance payments, etc. This account always shows a debit balance. I have finished with my presentation, Nagesharao. Any questions from the audience?
Yes, sir. Yes, sir. Yeah. Participants, please raise your hand, or all are unmuted. You can ask queries.
Before you start, I'm so sorry there were a lot of interruptions
No
today.
issue, sir. No issue.
Because this is not my regular laptop actually.
Okay. It's okay, sir. It's okay.
Okay.
Because it is
I will ensure that such things do not repeat.
Yeah.
It is my honest request to kindly bear with me for today that some
Okay.
disturbance has taken place.
Yeah, participants, please ask any queries. All are unmuted. Yeah, Ajay Singh.
Yeah, please tell me.
Ajay Singh, please unmute.
हाँ सर नमस्ते
Namaste.
सर ये ऑक्शन रिवर्स ऑक्शन क्या होता है सर
Reverse auction means क्या होता है? पहले
ऑक्शन
reverse auction मैं बता दूं. पहले इससे पहले when there was no reverse auction, what happens is we used to conduct an auction. We used to print a catalog. We used to print a catalog and circulate to various people saying that such and such material is available. All this intending scrap buyers we used to circulate. They used to come to the auction hall and they used to bid for the various items that have been sold. They used to physically come to the auction hall where the auction is conducted by the railways, and they used to bid and give and pay the amounts, right? That was earlier what used to happen. In the when the e-auction has taken place, in the e-auction we call it as a reverse auction. Here, why it is called reverse auction is we offer the material, they give the price.
Yes.
It is reverse auction. We one by one we will release the item for auction, for bidding. They will give the bids. That is why it is called a reverse auction. In the normal tendering for purchase of material, what you do is you will declare that I want such and such material. You please give your offer.
Yes.
Okay, that was the tendering. That's the normal course of tender. I want such and such material. I will advertise, and I will get the offers. But in this reverse auction is, I will tell I have such and such material. Intending buyers may give their offers
Yes.
for purchase. That is why it is called a reverse auction.
Okay. Okay, sir. Thank you, sir.
Okay.
Yeah, any
Anybody?
other queries? Any other queries? You can message me in the chat box also.
Anybody else? Any doubts on this class? Was it audible? Was it clear? Were you able to understand it?
They're all newly joined and they're appearing this appendix 2, sir,
Acha.
from all over India.
I will try to prepare a notes and then give it to you. Give me a couple of days time. I'll just hand
Okay,
over
sir. Okay, sir.
one,
Especially
study material like on this session, and I will.
exam pattern is 80% multiple choice questions, sir.
Okay.
20% descriptive.
I will. This description generally they will be in the form of short notes only. I think.
No, sir. It is only in the MCQ.
Okay, short notes are
Only multiple choice questions, sir.
only multiple. Entire thing is multiple choice only.
No, sir. 80%. 20% that is a short notes or
Short notes and all maybe. I will try to give some items for short notes. Out
please
of
share,
this,
sir.
whatever session I have covered.
We have WhatsApp groups is there. I will share in the WhatsApp groups.
Okay, I will send it across to you in a couple of days. You can share it.
Yeah, hope, sir, no queries from the participants. Can I call it a day, sir? Huh?
Yeah, please.
Yeah.
Thank you very much.
Yeah, sorry.
I am very sorry. There was some interruption,
sir, no.
disruption.
Yeah, the participants, behalf of Verifem, I thank faculty, the R.V. Ramnamurthy garu, retired deputy CEO accounts, for taking this stores class, this stores accounts and clarified doubts. Thank you, sir. Thank you again. Yeah, participants, please join tomorrow, 9:45, the first session. Thank you. Have a nice day.
Thank you very much, Nageshwar.
Thank you, sir.